The following is an update and technical analysis on Form Factor Incorporated, a company of the technology sector here off the daily interval, where in my previous video, taking a smaller short trade aggressive position and being stopped out. But now we have really come across a much larger primary reactionary high downtrend line off the December 2021 reactionary highs here. Just a massive key inflection point now, much larger where we were trading at, correlated to the what I would call a fundamental catalyst of reversing, of a complete reversal in Title 42, if and when it happens. And we've got that rejection. We had that rejection, nice clean back test right amongst it, offering a nice clean risk reward ratio. I am indeed inside a full position short trade setup with you could set some stops, give it some room, stops above that previous high here, gunning down for that first 50 exponential moving average support there, and then an undertaking down right down to that primary uptrend line off the November reactionary lows there. And here's the update with the updated levels that I have here. Nice clean reaction right amongst it. Previous high, potential stop out if you're scaling in or scaling out for 4.9% stop out versus that first target, which will correlate with the 50-day and 50 exponential moving average at 29.61 price support for a 5.6% drop, undercutting that significant level there down to 27.99 for a 10.3% crash, back down to the primary uptrend line off the November reactionary lows, 26.59 for a 14.7% crash. And then if ultimately we take out that primary uptrend line there, that will spell a big sell signal, in my opinion, down to 24.86 for a double-digit 20% crash there on a complete gap support. That's got to hold. That'll be a big key inflection point if and when we get there. And hopefully what I'll see here is a nice clean head and shoulder, classic looking top, and which would be correlating with the neckline there. And if that neckline, again, gets taken out, call it 26.59 to keep all eyes on traders, algos, that is a big key inflection point. We have come up amongst a massive key inflection point as of now. When it comes to a dual line of resistance, where we could add in place to anything, is the zoom out of the weekly interval here. And you can tell not at the same time with that primary reactionary high downtrend line, but the 200 weekly moving average being rejected there. And the last time we got rejected there, that was good for a double-digit 20% crash. When we undercut it, that was good for a 39%, almost call it a 40% crash. So it's been a great indicator as far as being rejected amongst the back test. Right there, it was good for a 26% crash. And an undercut of that 200 weekly moving average, again, good for a 64% crash. So the odds favor a move to the downside with key technical momentum indicators hovering down below their zero line thresholds there. So we'll see what happens. But again, the risk reward ratio remains skewed to the downside. Whether the fundamental catalyst never presents that opportunity, then a complete breakout would happen. Bull traders want to see a complete taking out of that primary downtrend line correlated with that 200 weekly moving average for a move up above. If again, if the Biden administration never reverse the stance on it and things could get a little bit shaky down there, then you could see a potential backfill the gap for a 22% in gains. That's exactly what long traders, bull traders, and long-term investors want to see: a complete break out of that move and a big, massive move on a backfill the gap to 39.17.